Hey everybody, this is RC Peck, the founder of Fearless Wealth and the creator of the Fearless Wealth portfolio. I hope you all are doing well. It is Saturday, February 23rd. We are ending a fairly painful week for anyone who owns anything to do with precious metals. And even though I talked about it last week, I just felt like I wanted to spend one more week talking about this because whether you're new to owning it, you've been in it 10 years, it's never a trivial thing to go through a clean out phase or a correction phase. So I want to spend time on that. Now, I'm calling this week's talk The Death of Gold. The Financial Times, I remember this, ran a story. It was one of their lead stories, December 13th, 1997. And they basically came out and said gold was dead. Now, gold had been falling since very early in the 80s from about $850, and here we are in 1997, 17 years later. Well, you shouldn't have owned gold then. You should have been in the stocks between basically 80, 82, and the year 2000. But they came out with an article that gold was dead, and they titled it The Death of Gold. Now, I want to look at gold today a little differently than maybe you're used to looking at it, but I just want to remind everyone, you don't win. We don't win at this by pretending, to be something that we're not. We don't win by playing the rules that someone else sets. And I often think of the David and Goliath story where when David dresses to battle Goliath, he doesn't put on the armor or the chainmail with the big sword, which people had been doing before him and losing and dying. What he does is he gets in his clothes, they're comfortable, he gets a slingshot, not a sword. He gets, 5 smooth stones, and he wins. And the thing is, David's win all the time, okay? But they have to first acknowledge their weaknesses and choose not to play by someone else's rules. So we're not going to beat hedge funds that are high-frequency traders that have 200 PhDs working for them. So let's just not play by those rules. But we also don't have to answer to our investors and give them quarterly reports and answer and say, why haven't our money gone up this week or this month or this quarter, or even this year? So there are advantages we have. And the thing is, if you're playing against a person or if you're playing against a team that knows how to really manage money in a very unique way, then the last thing you want to do is play that same game. You want to play a different game. So the game that I think we should play is a game of not having to answer to shareholders or quarterly calls because we're a publicly traded company, but let's answer to what's best for our money. And so the first thing I want to show you is this picture here, which is the percentage of bullishness, or how bullish are people on gold mining stocks. And if you can see, this goes back to 2008, 1, 2, 3, 4, 5 years, 5+ years of data. And you can see today, I just took this today, we are at one of those tipping points or turning around points that the percentage of bullishness has only been lower one time before we are today, and that was during the complete meltdown at the end of 2008 when everyone thought the world was coming apart, and we're there again today. So whether we get a little less bullishness over the next couple days or even week, we are near the bottom, if not already at the bottom. And I'm not saying today is the bottom. I'm saying there's a much lower downside than upside to gold mining stocks. The other thing I want to show you is what's the percentage of bullishness for the stock market. And I have all 5 of my pink circles exactly at the same level, whether the peaks or the troughs go exactly inside the circle. And I just want to point out that the percentage of people who are bullish on the stock market today is right up there in the top 5%-ish, excuse me for a second, of how bullish people have been before. And so I'm not saying that the market cannot go higher, though it absolutely needs to correct, and there's so much money printing that it probably will. But just compare the price chart I showed you a second ago to this one, and you'll notice that we are near the bottom. The next chart I want to show you is to flip this whole thing on its head. And look at this price chart here. See how it's just absolutely falling from 2005 till today. Now, what this price chart is an inverted price chart of gold. And so the reason why I thought this was really interesting was I have to believe to your brain you can clearly see that this inverted price chart of gold, so the more this white line falls, the higher the price of gold. And you can probably see here that this really looks like it's falling. And right now it's consolidating. And whenever something consolidates after a long trend, it has an 80% chance of breaking out in the same direction that it came in. So it came in falling in this example, and there's an 85% chance when it breaks out of this consolidation, it will break out to the downward side. And I just think that's great that we can look at this from a completely flipped perspective and notice, oh wow, yeah, that looks pretty clear the direction that it's going. The last thing I want to show you is something that I almost never talk about, especially with precious metal mining stocks or almost anything, and that's actually earnings and how much the earnings are. And so there's a lot of numbers on this price chart, but I want to show you the very bottom, the green ones. And I just want to have you notice that they are going up from $5, $5.60, $12.70, $6.90, $6.90, $19, $19, $32. It dropped to $28 and up to $36. Those are the earnings of the Huey, the Amex Gold Bug Index. And you can clearly tell that the earnings are going up. So this is clearly not an earnings thing, why the market is falling. And I just look at this as there's a cleaning out. There are 3 big cleanouts in any secular bull market, and we are in one now. The reason why this cleanout feels so much more painful than the previous one is because during this cleanout, the stock market itself is going up while this sector is falling, and that feels very, very difficult. Thanks so much for being here. My next monthly strategy gathering is March 12th. I hope to see you there. You guys have a great weekend, and I will speak to you soon. Take care.